Imagine raising $47 billion for a company that rents out desks. Not just any desks, mind you. Special desks. With free beer. And a ping pong table. This is the story of WeWork. The company that convinced some of the smartest investors in the world that renting office space was worth more than Ford, Delta Airlines, and Target. Combined. Spoiler alert, it wasn't. By the end of the story, that $47 billion valuation will become $44 million. That's a 99.9% loss. So, grab your overpriced kombucha, find a hot desk, and let's talk about one of the most spectacular corporate disasters in modern history. I'm the business historian. Let's get into it. Our story begins in 2010, in the Soho neighborhood of New York City. Two guys, Adam Neumann and Michael McKelvey, opened the first WeWork location. The concept was simple. Take a big building, divide it into smaller office spaces, add some couches and coffee, then rent it out to freelancers and small businesses. This wasn't a new idea. Co-working spaces had existed for years. But Neumann had something different, charisma, and more importantly, a story. He didn't sell office space. He sold a lifestyle, a community, a revolution in how people work. He told investors that WeWork wasn't a real estate company. It was a tech company, a platform, the future of work. And investors believed him. In 2014, WeWork raised $355 million at a $5 billion valuation. $5 billion for renting desks. But that was just the beginning. In 2016, Neumann met a man who would change everything. Masayoshi Son, the CEO of SoftBank, a Japanese investment giant with very deep pockets and apparently very little patience for due diligence. According to reports, Son met with Neumann for just 12 minutes before deciding to invest. 12 minutes. In that meeting, Son reportedly told Neumann he wasn't thinking big enough, that WeWork should be valued at $70 billion, not $20 billion. Neumann, to his credit, did not argue. By 2017, SoftBank had committed $3.1 billion to WeWork. The company was now valued at $20 billion and expanding globally, 200 locations across the world. But SoftBank wasn't done. In January 2019, they had another funding round, $1 billion more. This pushed WeWork's valuation to its peak, $47 billion. To put it in perspective, WeWork was now worth more than established companies like Ford Motor Company, Delta Airlines, Target, Marriott International. All of those companies owned massive assets, factories, planes, hotels, stores. WeWork owned leases. They didn't even own the buildings. They rented them, then re-rented them to other people. But hey, they had free beer and beanbag chairs, clearly worth $47 billion. In August 2019, WeWork filed to go public. This meant they had to reveal their finances to the world. And oh boy, were those finances interesting. In 2018, WeWork had revenue of $1.8 billion. Impressive, right? They also had losses of $1.9 billion. They were losing more money than they were making, and it was getting worse. In the first half of 2019, they lost $690 million on $1.5 billion in revenue. But the numbers weren't even the worst part. The IPO filing revealed something else. Adam Neumann's, let's call them creative business practices. Here are some highlights. Number 1. Neumann had sold the trademark rights to the word "we" to WeWork for $6 million. He literally charged his own company $6 million to use a word that's in the dictionary. After public outcry, he gave the money back, but the damage was done. Number 2. Neumann owned buildings that he then leased back to WeWork, so the company was paying rent to its own CEO. Number 3. He had special voting rights that gave him complete control of the company, even though he owned less than 30% of it. Number 4. The company had spent $63 million on a private jet for Neumann, because apparently first class wasn't good enough for a guy running a company that was bleeding billions. Oh, and there were reports of him smoking marijuana on that private jet, which, great leadership. Investors started asking questions, hard questions, like, how is this company worth $47 billion? And why are we giving this guy more money? And did he really trademark the word we? The IPO roadshow was a disaster. Institutional investors weren't buying the tech company story anymore. They saw what WeWork really was. A real estate company with terrible margins, massive losses, and a CEO with a god complex. Within weeks, WeWork's projected valuation dropped from $47 billion to $10 billion. Then it got worse. On September 24th, 2019, Adam Neumann stepped down as CEO. His board and investors had finally had enough. The IPO was delayed. Then, 6 days later, it was withdrawn completely. WeWork was in crisis. They were burning through cash at an alarming rate, about $700 million per quarter. Without the IPO money, they were heading toward bankruptcy. SoftBank, who had already invested over $10 billion, had a choice: let WeWork die, or throw more money at it. They chose option 2. SoftBank arranged a bailout package worth $9.5 billion. In exchange, they took control of the company and pushed Neumann out entirely. Though, they did give him a $1.7 billion exit package. Yes, you read that right. The guy who drove the company into the ground walked away with $1.7 billion. Meanwhile, thousands of WeWork employees were laid off. In May 2020, SoftBank CEO Masayoshi Son publicly admitted he had been foolish to invest so heavily in WeWork. He valued the company at just $2.9 billion. The fall continued. In May 2021, WeWork lost $2.1 billion in a single quarter. In October 2021, they finally went public, not through a traditional IPO, but through a merger with SPAC, a special purpose acquisition company. Their valuation? $9 billion. Still losing billions. Still burning cash. Still trying to convince people they were a tech company. By August 2023, WeWork warned investors that they might not be able to continue operating. Bankruptcy was on the table. And on November 6, 2023, it happened. WeWork filed for Chapter 11 bankruptcy. Their stock price? 84 cents per share. Their valuation? $44.5 million. From $47 billion to $44 million. A 99.9% loss. So, what went wrong? Let's be clear. Co-working spaces aren't a bad idea. Flexible office space has real demand. WeWork actually had a decent product. But they had 3 fatal problems. Problem number 1. The business model was broken. WeWork signed long-term leases, usually 10 to 15 years, with landlords. They then rented those spaces out to short-term contracts, sometimes month to month. This is incredibly risky. If the economy tanks and companies cancel their memberships, WeWork still has to pay rent on those long-term leases, which is exactly what happened during COVID. Occupancy dropped, revenue collapsed, but the rent bills kept coming. Problem number 2. They grew too fast. WeWork opened 777 locations in 39 countries. They were expanding faster than they could manage. Each new location required massive upfront investment, renovations, furniture, staff. They were spending billions to grow, hoping that scale would eventually make them profitable. It didn't. Problem number 3. They believed their own hype. This is the big one. Neumann and his team genuinely believed WeWork was a tech company worth tens of billions. They weren't selling software, they were building platforms. They were landlords with better interior design. but by calling themselves a tech company, they could justify insane valuations. Tech companies trade at 10 to 20 times revenue. Real estate companies trade at 1 to 2 times revenue. WeWork wanted tech company multiples for a real estate business, and for a while they got them, until reality caught up. So, what can we learn from WeWork's $47 billion disaster? Lesson 1. A good story isn't a business model. Neumann was an incredible salesman. He sold a vision of the future of work, but vision doesn't pay the bills. Eventually, you need actual profits. Lesson 2. Growth without profitability is dangerous. WeWork grew incredibly fast, but they never figured out how to make money. They assumed scale would solve their problems. It didn't. It just made the problems bigger. Lesson 3. Corporate governance matters. When one person has too much power and too little oversight, bad things happen. Neumann's conflicts of interest should have been red flags from day one. Lesson 4. Due diligence exists for a reason. SoftBank invested billions based on a 12-minute meeting and a charismatic pitch. That's not investing, that's gambling. Lesson 5. You can't fake fundamentals forever. WeWork convinced investors they were a tech company for years. But when they had to show their books for the IPO, the truth came out. You can't hide bad unit economics forever. As for Adam Neumann, he's doing just fine. After walking away with $1.7 billion, he started a new company called Flow, another real estate venture. And somehow he convinced Andreessen Horowitz to invest $350 million. Because apparently, some people never learn. WeWork's story is a reminder that in business, fundamentals matter more than hype. Revenue matters more than vision. And at some point, you actually have to make money. $47 billion. Gone. All because some very smart people believed that renting desks with free beer was worth more than Ford Motor Company. If you enjoyed this deep dive into corporate disasters, hit that subscribe button. We've got plenty more stories of businesses that fooled the world. Until they didn't. I'm the Business Historian. Thanks for watching.